Are you aware that there are two types of inducement? We have the major inducement and the minor inducement. This is Kome. Today, I want to share with you how you can actually trade and improve your trading using the major and minor inducement. Pay attention. The first thing we're going to do is we're going to use this diagram to understand the concept very well. Then we'll go to the chart and I will explain everything to you in details. So first, let's talk about the diagram A. So for the diagram A, is quite different from each of these diagrams. So you really want to pay attention to know exactly what this smart money concept inducement is all about. Okay, now this is a very key term when it comes to smart money concept trading. Okay, so the first thing that we must pay attention to is the direction of the trend. So this implies to both the bullish and the bearish direction. So all you need to do is just to flip it around and you get the same result. Okay, so we have this like this, price pushing to the downside, all right, and immediately price push to the downside and a new low is created. Okay, a new low is created and price push up. In order for us to confirm this low, there has to be an inducement. Inducement must be taken, all right. So in order for us to confirm the low, then inducement must be taken. So how do we identify this inducement? And that's what I'm about to share with us in this video. Okay, so the first thing that we must pay attention to is, did price break structure? If price broke structure, where did price break structure from? And where did price break structure to? Where is price going to? Okay, so the first thing that we must pay attention is this. So we have the inducement have been taken in this case, which means that this low is confirmed. So this low automatically becomes a weak low, all right, and the high that broke inducement becomes a strong high. So that's just an example of what you could get. Okay, so let's pay keen attention to what I'm sharing with you. Another thing we must take note of is this. You see, after this inducement is taken, meaning that we're expecting a new high. True or false? True. And probably this high mitigated a previous zone here, right? There's a mitigation of a zone like this, all right? So based on this mitigation, where are we looking at for our entries? We are going to wait patiently for price to break structure again. So what happens if price breaks this low? Well, if price breaks this low, we are not taking any action. We wait patiently because the actual break of structure is this, because this move is just an internal move. Of course, it was the one that was responsible to take out the inducement. However, if you really want to get constant and consistent result just like I do, then you have to watch this video to the end to get and gain mastery of this inducement. Okay, so after the break of structure, what next are we actually looking? So once there is a break of structure, the next thing that we're looking out for is going to be our inducement. So in this case, where is our inducement? Is this our inducement or is this our inducement? Okay, in this case, we don't have a minor inducement here. We only have a major inducement. So this case, this is our inducement. All right, so I'm going to type this as major inducement so that we can understand it better. All right, so this is actually a major inducement, and with this inducement taken, we can now look for selling opportunities. Now, how do we look for selling opportunity? It's quite simple. After inducement have been taken, you wait for lower time frame confirmation. So you want to learn about this, subscribe to the channel, and I'm going to drop a video on this very soon. All right, and depend on the like we get from this video, that will determine if I'm going to do more of this for you guys for free. Okay, so immediately this happens, we are going to look for this same thing, same pattern, inducement and mitigation, then continuation to the downside. All right, so that's just by the way. We're not talking majorly on entries today. You need to understand this because this is a foundation to your success in smart money concept trading. Okay, so diagram A is quite simple and very straightforward, right? So let me give you a quick recap here before we go to the other one. So price kept going to the downside like this, break structure, takes inducement, all right, takes this as inducement. And what happened now? Okay, based on this move to the downside, where is our inducement? We have this as a major. So we have two major inducements actually. So in this particular scenario, there is no minor inducement. All right, I'm going to define, when we go to diagram B, I'm going to define what minor inducement is for you, and you are going to see the difference. Okay, so we have this and we have this. So if you notice vividly, immediately price took out this first inducement, which is also a major inducement, price reacted and sold. Right, of course, when we see a lower time frame opportunity after the inducement have been taken, then we can start looking for a sale. Otherwise, we simply wait for price to push. And take note, we have the first mitigation and we have the extreme. So in this case, price went back to the extreme and started to push down. So where do you start calculating, or where do you start analyzing from? You start analyzing from the highs. You start analyzing from the highs, which is this place, right? This is where you are going to start your analysis from. Why? Because this high was the one that took out inducement earlier on and also broke structure. So because those two have happened, what we need to do next is to pay attention to price movement. And how do we do that? How do we pay attention to price? Is quite simple. So we start from here. All right, so the same way that we did this, we do this, but it's just that this one is quite different. All right, like this. So immediately we see this break, we have this. So after this inducement, we can start looking for our selling opportunity and sell to the downside. So let's not waste much of the time on diagram A, because we have a lot to discuss on both diagram B, C, and especially diagram D. So you want to know this and learn this once and for all. Okay, so we have the diagram B. The diagram B is quite similar, but there is a difference. And let's go straight to the difference, because we already talked about this other part, right? So price came down, took out inducement, right? Pushed up, there was no confirmation here. Push up, mitigated a valid zone and started to come to the downside. Right now, everything that we see, let me show you, everything that we see between here, this low and this high, is internal structure. And we don't want to trade internal structure if we really want to make a lot of progress, right? So we want to trade the major structures, and this is where we'll need to pay attention to. Okay, so we have our break of structure. After your break of structure, what are we looking out for? We are looking out for our inducement. So in this case, where becomes our inducement, this is our inducement. All right, so let's take this. This is our inducement. Now the question now is this: is this a major inducement or a minor inducement? I'm waiting for you. Is this a major inducement or a minor inducement? This is actually a minor inducement. All right, now where is our major inducement? This is our major inducement. Why is this our major inducement? Because this is the origin of the move. Do you understand? This is the origin of the move. So we now have, in this case, diagram B, we have major inducement and minor inducements. All right, let me do this: major inducement and minor inducement. So let's type minor inducement. What do you do with minor inducement? Nothing. You don't trade it. If you really want to be profitable, don't trade minor inducement. Ignore it. All right, but when I say ignore it, I mean you can identify it, because it is when you know how to identify it, you'll be able to identify the major one. Okay, now why is that? Let me show you why this is a minor inducement. Okay, you see all of these structures, everything here, they formed inside this range. So the range between this low and this high. So everything we see inside, it doesn't matter the length, doesn't matter the size of the candle. All right, everything is internal structure. So which means, what exactly do we have here? This is what we have. We have this like this. All right, this is exactly what we have, right? Do you understand? Let's pull this out. This is exactly what we have, which means that we need an inducement to continue the sales. And this is why when price comes and you want to sell from here, before you see your stop loss is taken and you say, oh, that's not the right one, you come here, you take this other block and the same thing, stop loss. You say, oh, that's not the right one. You come here, take the other block, and you lose. And price come here, you now say, oh, this is it, this must be it, very clean, fair value gap, nice fair value gap, nice imbalance, and the rest. And what happened? Price push up or weak you out and start going down with full momentum. Why is that? It's because of these inducement secrets which I'm sharing with you right here in this video. So you really don't want to play with this, I tell you the truth. All right, so how then can we know the minor inducement? Take note, the minor inducement does not break structure. The minor inducement, these are the characteristics. It does not break structure. And secondly, minor inducement trades within the range. All right, so how then can we let me give you another scenario, the same diagram. So if this had happened, let's say something like this happened, where is our major and where is our minor inducement? Everything changes. One of the things that changes it is after the break of structure, and we need to see what exactly happened. So we see this now broke structure, which means that there is no minor inducement here. This is our major inducement and high probability trade opportunity. Do you understand? So this becomes our major inducement. So what we want to do here is wait for price to take our major inducement and what? Continue to the downside. Have you not been in a situation whereby you wanted price to come down all the way through here, and unfortunately price never came there? This is one of the reason. One of the reason is this, because price had already taken out the major inducement. Now, because liquidity is the fuel for the market, so when price goes and starts taking liquidity, immediately liquidity is taken, then price supposed to continue to its direction. However, anytime an inducement fail, then you should think or have a double thought or think of changing your bias. All right, so that will be another video. I will explain that to us subsequently. Okay, so in this case, this becomes what? A major inducement. So what happens if this was what broke structure? Okay, this is another example. I hope you are following what I'm saying. This is another example. Price came down, broke structure, pushed up, broke this structure again. Take note, which means that we have this. Let's say we had this as a break of structure, and this was a single push to the upside. There was nothing here. This was a single push. So we have something like this, like this, like this. So automatically this becomes a major what? Major inducement. Do you understand it? In case you don't understand it in the first watch, make sure you watch the video again at least 3 times. This is where you'll be going to pick it. When you do it 3 times, you'll notice that there are some things you thought you got, but you did not get them. Okay, so when you are done, this is when you now start checking your chart and understand it better. Don't worry, we'll go to the chart and I'm going to show you how you can operate and use this very, very well. Okay, so let's take this back because we have more examples with diagram C and diagram D. So we have this as what? Our major inducement, and this becomes our minor inducement. Can you tell me why now? Now that I've changed it, can you tell me why? Simple. This becomes our major. Okay, major inducement. All right, this becomes our major. Okay, before we go to the chart, we must finish our diagram first. Okay, so this is our major, of course, that's our major, and this what? This is our minor inducement. So in this case, wait for price to come and do what? Not to react to any of this. Price should come no matter what is happening here. We are not interested, except of course price now does something like this, which means broke structure, took out another inducement, and before going to the downside. Otherwise, we simply wait patiently for price to come, take this, then we can now start looking for ourselves. So let's go to diagram C. So in diagram C, what are we looking at? We are looking at something entirely different, and D is very complicated. You might want to see it and wait till we are done with that. Okay, so for the diagram C, what can we see? First thing I want you to notice is how that price took out the previous high. All right, how that price took out the previous high. Price came, took out this high immediately. So what do? We start our analysis from this high. Take note, from the highest. So if it's a bullish trend, you start from the lowest. Do you understand? All right, so immediately that happened, we are seeing price and pushing to the downside. So in this leg move to the downside like this, where is our major and minor inducement? I'm giving you 2 seconds. 1, 2. This is our major inducement. Wrong. Okay, this is our major this is our major inducement. Wrong, right? So this is where most of you are getting it wrong. You just want to pick and just trade anything. No, that's not how it works. This is what? This is our major inducement. This is the accurate one. All right. So this is a major inducement. Don't worry, I'm going to explain to you. And this one is our minor inducement. Our minor inducement. To tell you the truth, this is going to change your life if you understand this clearly. Okay. Now, why is this a major inducement? Why is this a major inducement? Let me show you why it is actually a major inducement. Now, when price, where is it now? When price pushed up, took out this high, price came down, pushed up, I came down. Now, this is it. You've gotten it wrong now. All right. I'm just trying to pull your legs. This is not a major inducement. Are you with me? Let me show you why. This is the reason. Okay. So this whole move here. So I told you that it doesn't matter the length of the move, right? So that's what I mean. This whole move here, see, this is a single move, right? This is a single move. Take note. This is where most of you get it wrong. Because this is a sharp swing, does not make it a major inducement. Take note. This did not break any low. This did not break any structure. So we can literally say that from this point upward is just a single push. You get? It's just a single. If we go to higher time frame, for example, we are going to see it as a single candle. So that's an example of what I mean, and we need to pay attention to these things. So what happens now if this comes like this? Then this becomes a major inducement. Why is that? I already told you why. The reason is because this broke structure, pushed back, broke structure again. So this becomes a major inducement. So we want price to what? Come, take it out and continue to the downside. Do you understand? But if that does not happen, then that's not an inducement. So now, what about this one? This one is still a minor inducement because this low did not break any structure. This price action here formed within this candle range. Do you understand? So let's go back. Then I'm going to explain to you how this diagram should work. Okay. So in this case, the way this diagram is, this is the actual, just like diagram A, right? Just like diagram A, B instead, rather not A. Just like diagram B, this becomes the major inducement. And where is the minor inducement? Of course, this is your minor. This is a minor inducement. This is a minor inducement. This is a minor inducement. Are you with me? All right. So if you ask me, okay, amongst these whole three moves, which one is the most accurate minor inducement? Of course, this one, because price can come like this and immediately take this and react. Of course, most time price cannot come and take this low. There is no way. It's difficult. React, come take the major inducement before pushing to the downside. So the question I want to ask you is that, do you want to, catch a very nice move, or you just want to be trading, right? Don't you want to make money? I guess you want to do. So if you want to make money, then pay attention to what I'm saying. Subscribe to this channel for more, and make sure that you share this video with others. So let's go to the last diagram before I show you on the chart. So the first thing that you must pay attention to here as well is the same thing. So this whole thing is a single move to the upside. So we start what? Our analysis from here. Now in this case, this one is quite complex. So I really want you to pay keen attention very, very well. Smash the like button in case you have not. So the first thing is this. After this happened, what a price broke. Now take note, these are swing high, these are swing low. So anything that happened inside this is what? Anything that happened inside this is just internal structures. They will just confuse you. That's if you don't understand structure and if you don't understand inducement. So after you are done now, you'll be able to know where you are in the market, because it's very important that you know where you are in the market. So for example, immediately this is formed, we know that this would be our potential next target. However, maybe this one is taking a long time for price to get here. What do? You simply wait. Of course, you wait. Okay, so you wait for internal structure to be valid. And what makes it valid? Take note, we have a move, which this one now stands as a break of structure, but you must understand that everything here is internal, which means that the probability is not as high as the one I showed you in diagram A and diagram B. All right. So first, you must wait for price to take this high. So immediately price takes this high, you are not entering here. Okay, you wait patiently for price to break this. So immediately price breaks this, what do? You can now look for what? Another inducement here. Then you can start looking for your selling opportunity. Okay, that is one way you can do that, because one, this becomes an inducement, right? This becomes an inducement. Okay, this is a minor inducement, this is a major inducement. Let me explain. We have this as internal structure, and we have this, and this becomes what? Inducement. This becomes inducement, right? So price comes and did what? Broke structure again, which is what? Internally. Broke structure again, which is internally. And what else? And price pushed up, came down. Probably there was a minor swing here, broke this. This is inducement. So in this case, we can actually sell from here. So after this is taken, we can look for sell, look for our short confirmation from that point. Okay, I just hope you understand this. Now let's go to the diagram and let me show you, to the charts instead. Let me show you an example of what this is. So in this example, we're using the immediate price action because it's still fresh in your brain, right? We're using immediate price action to explain this better. And of course, if you are in my free Telegram channel, you will notice, or you are in my VIP, you will notice that these trades were sent live even before they were formed. And because I was very busy and it was on Friday, I missed two other entries also. Yes, two other entries or one more, which is combination of this. So just last week we made a total percentage of 12%. That's not bad for 1 week, right? And it's the same method, the same strategy. You just have to understand it and put a little bit of Come defined concept, all right, which is the KDR resistance, which of course you might not really know what it is now, but don't worry, subsequently, depend on the traction we get from the videos, then I'm going to make that for you for free. Okay, so the first thing I want us to pay attention to in this bullish market is this. Remember, you must start from the low point. Let's start from this low point. So we have this. Let's start from this low point. We have this. Immediately we have this. Our high is not confirmed yet. So we have a single push like this. Of course, I don't want to complicate this, or because look at this. This is an inducement, all right? This is an inducement. This is why I said subscribe. This is an inducement. But I don't want this to be complicated for you. So what we'll do is we're going to use a pullback that is at least 3 candles or 2 candles, all right, so that you can understand what we're doing better. So of course, which means that this high is now confirmed, and we have this as a break of market structure. So immediately we have a break of structure. What else are we waiting for? We're waiting for inducement. And where is our inducement? This becomes our inducement. In this case, price did not come to take the inducement, right? Price didn't come to take the inducement. So what do? Sit on your hands. You don't have to engage every single time, all right? Sit on your hands. So immediately that up, another break of structure. Not another break of structure as it were, but it is a transfer of break of structure. So transfer from here to this point, okay? I hope you are following. So we had a transfer of break of structure from that point to this particular point. So the next thing that will be done is this. Wait for what? Our inducement. So in this case, this is very tricky. You see this? This is very tricky, right? In this case, where is our inducement? Is this our inducement? Is this where is it now? Is this inducement? Is this inducement? Or is this now? We already made an example of this already within the 1 to 4 DAG that we used, all right? So in this case, this is our break of structure, right? So where is our inducement? This becomes our one here, right? Don't complicate things. This becomes what? Our inducement. Okay, so what happened? Price never came for the inducement, and we now have what? Another break of market structure. Where is it? We have this as what? A break of market. So immediately we have this as a break of structure. What else I will inducement, all right? So remember, we now have what? Transfer of POS, transfer of break of structure, right? It's transferred again, all right? You can also transfer inducement, but in this case, we have, of course, we now have what? This low as our inducement. Why is this low our inducement? This is exactly what happened. Price pushed up, right? Broke structure, pull and pull back. You get it? So this becomes what? Our inducement. It's quite simple once you understand this concept. So the same thing happened here. Price what? Did what? Came here, broke structure to the upside, making it what? Another break of structure. So what? Transfer of break of structure. Sorry about that. Transfer of break of take a little bit of water. Sorry. So transfer of what? Break of structure. So in this case, where is our inducement? Of course, this is not this where you get it wrong. This is not inducement. This is not inducement. This becomes what? Our inducement. This one here. I see it. This becomes our inducement. All right. This becomes our. So the same thing happened. Price pushed up. Out this high. Transfer of what? POS. All right. Because no inducement was taken in this whole to the upside. So we have a transfer of same thing happening. Same thing is happening. So now that we have our break of structure, we need to what? Confirm our low. And how do we do that? By inducement. We have this and we have this. Our high is not confirmed yet because as at this time, before this candle form is not confirmed, so it's only confirmed after inducement have been taken. So now a new high is formed. So in this case, where is our inducement? This is our it's our inducement. Are you with me? So we have this as what? As our inducement. So what did I say? Immediately inducement up, and of course this is a major inducement. Okay, immediately the inducement is taken. Can now look for what? Our opportunities from this zone. Now I've showed us what to look for, right? You want to see something like this, you see something like this on upside. Okay, so that's exactly what happened there. So what would have happened? Let's assume that this did not go well. You change your bias. I've said that before. All right, I've said that before, and most times you will not see confirmation, then just forget it. So if you don't see confirmation and price still went up and break, then look for what? Don't just rush into the trade, because let's assume you rush into the trade, you would have also rushed out. All right, look for another inducement. Where is the inducement? This is what? Our major inducement. I hope you are following what I'm showing you real well. Okay, so forget these vertical lines are my KDROC stamps that helps me with my trend direction. All right, this is very powerful and very accurate. It has over 80% win rate in accuracy in the trend direction. I'm telling you the truth, it's mind blowing. All right, so literally look at this. Let me show you something more that you don't get. This. So which means we have but most of you now will now be picking things like this as in how is this an inducement? This cannot be an inducement. All right, so take note. Immediately inducement happens, what happened? Price what? Continue to the upside. Okay, so why did I now take this trade? You now know why I took this trade. Immediately this was broken. If you notice, before we added this one, this was the only one I had here because I already used my eyes to pick the rest. Okay, so break of structure, inducement, or price came, already reacted from this inducement, push up, but take note, price failed to take this high, which means that there are still liquidity lying on this high. So I'm actually interested in this high, right? I'm interested in this high. That's the idea. So what do I do next? It's quite simple. The next thing I did was, after the break of structure, with, you see, my ADRC stamps were telling me bearish when price was coming down, and immediately it got here, it told me it's bullish. So which means I'm now looking for buying opportunities. All right, so which zone was the closest to my entries, or which inducement is best? So all I did some internal mapping, okay, which is this. So we have this as a break of structure. If we go to the 1 minute, we are going to see this clearly. Of course, I use 5 minutes, I use 15 minutes. Okay, so depend on market condition, and that's because I strictly understand what I'm doing. Okay, but for you that is watching this now, 5 minutes is okay for your entry, right? Till you master this, right? Unless, and if you want to fast track this, feel free to join the Kome Academy, right? Just check video description for link, right, to the free Telegram channel. Okay, so the first thing that I did was to identify my inducement, and as you can see, this was a low identified as my inducement. One of the reasons is because that was the low of my bearish stamp, the bearish KDROC stamp. Now this is where we now talk about order flow. This is my bullish order flow. All right, so I expected that price react from here to the upside. Immediately price taps into my bullish order flow, and this was when I went to the 1 minute, but we're not doing that today. But remember, we're talking more of what? Inducement, major and minor inducement. So that's exactly what happened. Now you might now say, oh, but price did not break this high and you took this trade. Yes, that's because I already know where I'm coming from, where the market is. Take note, this is where market is reacting from. Okay, and this was the last point of support, actual support. This was the last point that is responsible for this high, which means automatically I'm expecting that this high is taken, right? So I don't like, of course you can do it, but I like my 1 2 3. Look at that. You can see 1 2 3, 1 2 3, right? I'm telling you things I practice. So for example, of course, this 1 to 5, I could do more. This 1 to 5, all right? You can see that right there, and you can see it kept going and going for the whole day. But I love my 1 2 3 risk to reward ratio. Okay, so let me show you more examples as we go. Now, after the break of structure, what else are we looking for? Inducement. There was no inducement, and we now have what? Another break of structure. So when we have that as a break of structure, what else are we looking out for? We are looking out for inducement. This is our inducement, and as you can see, I drew it right here. So all this move, oh, you missed this move. Of course, that's why I'm a sniper, right? That's why I see most of these trades are sniper entries. If you go to 1 minute, okay, I think I should just show you. Probably you think I'm just capping. All right, when you go to the 1 minute, you now see how sniper it really was. All right, both entries. All right, there were nice opportunity, and of course they were sent to the free telegram and the rest. You can see both entries, they were all snipers, and you can see that I actually annotated a lot of things on the 1 minute, right? So this is sniper, price came down, I still took this buy. See, after this happened, remember I was also expecting this high to be taken. Push, inducement, what? Break of structure. Look at that. This was where we entered, sniped this zone right there, this candle, sniped, right? Sniped. And if you go to my free telegram channel, of course you are going to see the entries, right? So I'm not telling you things that I don't practice. You will see me call these trades live and direct as well. Okay, so that's exactly what happened here. Now in this case, after the break of structure, there's what? Transfer of break of structure. And see, we now have on that break here, automatically this becomes what? Our inducement. And where is our entry after inducement? Order flow, order block. This becomes our entry. As you can see, boom, this is our entry. But of course, I told you I didn't enter this particular one because it's already Friday and I wasn't interested. I left already because I had made a lot of money that day. I've made a lot of profits, right? Look at that, because it's just 2 p.m. GMT plus 1 time and around the 8 a.m. Eastern Standard Time. So you see, it's a good still good timing for me to would have taken a trade, but I did not, because I understand what I'm doing. Okay, so I know this video is a little bit long. This is why it's very important you understand. So you see that I put a lot of work on this. So if you gain value, make sure that you subscribe to the channel, and I hope to see you in the next week.